What's up everybody, welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony, let's jump in. Okay, first up guys, before we jump into the Evergrande triggered housing crisis and China's economy, we have to look at the deteriorating situation vis-a-vis Taiwan. On Wednesday, in a move that caused a lot of anger in the mainland, former Japanese Prime Minister Shinzo Abe made a speech warning about an invasion of Taiwan and advocating for a trilateral security dialogue with Taiwan and the United States. Quote, "A military adventure is the road to economic suicide. For sure, China is huge, but since it has close ties with the global economy, a military adventure in Taiwan must have a grave impact on the global economy. In other words, China would be severely hurt. A Taiwan emergency is a Japan emergency. That is, it's an emergency for the US-Japan alliance as well. It's imperative that people in Beijing not misjudge that, and most especially President Xi Jinping." End quote. The following day, PRC Foreign Ministry spokesperson Wang Wenbin expressed that Abe had, quote, "blatantly blabbered utter nonsense," end quote, about, quote, "China's sacred territory," end quote, going on to say that, quote, "those who dare to pursue the old path of militarism and challenge the bottom line of the Chinese people will find their brains bashed in," end quote. The state-run Global Times was even less diplomatic, calling Abe's comments evil and claiming that this evil was, quote, "in his DNA, dating back to at least Shinzo Abe's maternal grandfather," end quote, and claiming that, quote, "if Japan adopts Abe's policy regarding the island of Taiwan, it would be Japan's suicide and not just an economic one," end quote. The Taiwan Strait situation is indeed becoming more grave. Starting from last Sunday, the People's Liberation Army Air Force sent 18 fighter jets and 5 H-6 bombers, as well as a Y-20 aerial refueling aircraft into Taiwan's air defense identification zone, according to Taiwan authorities. Provocations continued throughout the week. Reports from this week also claim that Taiwan, with the help of foreign governments, including the United States, is engaging in a secretive large-scale project to build its submarines. An investigation by UK media outlet Reuters found that Taipei has, quote, "stealthily sourced technology, components and talent from at least 7 nations to help build its underwater fleet with the potential to exact a heavy toll on any Chinese attack," end quote. The United States has provided combat system components, sonars and other key technology. Taiwan appears to be preparing for the worst. Now, there has been a lot of talk in recent months about the rollout of a new policy in China called Common Prosperity. We have been following developments regarding what this policy means in China since it was first announced at the beginning of the year by General Secretary Xi Jinping. We've also been following the debate around a pilot rollout of a highly controversial property tax. It has been argued that the property tax is a key mechanism to achieving this common prosperity policy. A property tax can support redistribution efforts and would likely soften home prices, which are incredibly high. For example, according to the most recent data from the eHouse China Research and Development Institute, in the technology city of Shenzhen, the average cost of buying an apartment was 43.5 times the average annual salary for local residents in 2020. And we'll be talking about Shenzhen again shortly. Indeed, in a recent interview with a former member of the Chinese Academy of Social Sciences, the interviewee expressed that the, quote, "property tax is a core component of common prosperity. Without it, income disparity cannot be adjusted because the majority of people's wealth is in properties," end quote. Now, while the common prosperity policy angle is a real factor, there is another component of the property tax debate that is being underreported, using a property tax as a form of revenue to replace land sales. That is to say, the property tax debate is also linked to the issue of land sales, a massive source of local government revenue and thus a source of both economic and political power. The problem is that even the most optimistic projections of what can be expected from a property tax falls far short of the revenue that local governments currently enjoy from land sales. As we discussed last week, land sales revenues last year were almost as much as total tax revenue at over $1 trillion US. And local governments cannot afford to reduce revenue. In fact, over the weekend, in a report, US ratings agency Moody's estimated that local governments could see a 5.1 trillion RMB, approximately 800 billion US dollar, shortfall in fiscal funding in 2022. And of course, all of this is tied to the Evergrande housing crisis, which we'll be discussing shortly, showing that the current property crisis is rooted far deeper than just a few bad companies, but rather is tied to China's wider political and economic system. Because local governments rely so much on land sales as a revenue source, they have a powerful incentive to keep land prices high and credit flowing to developers. This means both higher housing prices and moral hazard. In a way, therefore, local households are paying a type of forced tax when they purchase properties at artificially inflated levels, especially in lower tier cities where prices really are detached from real underlying demand. While a moderate housing correction would cause tremendous short-term pain, which would not be limited to China, Australians, for example, would feel it, and result in lower growth for China, it would have two very positive results. One, growth would be much more sustainable and systemic financial risk reduced, and two, homes would become much more affordable for tens of millions of poorer Chinese households. There are two powerful forces, however, that have vested interests in avoiding a correction. One, local governments, for the reasons we just discussed, and two, the property-owning first and second tier urban middle class, who jealously defend their enormous real estate wealth. Of course, China's Evergrande-triggered housing crisis continues this week. Let's finish this episode of China Update by looking at several key developments in China's property sector. First, on Wednesday, according to a statement by the local housing authority, Chengdu, the provincial capital of southwestern China's Sichuan province, will accelerate approvals for home sales and property loans, as well as ease restrictions on using proceeds from pre-sales. This will take a lot of pressure off property developers in that part of the country. The city boasts the biggest economy in the region and a population of 23 million people. Also, land sales across the country are down. According to the China Real Estate Information Corporation, plots offered by the municipal government of Shenzhen, China's most unaffordable housing market, fetched just 5% more than the total asking price in auctions that ended on Thursday. That's down 31% since May. The situation was worse in the major city of Nanjing, where about 26% of land parcels offered went unsold. And speaking of the technology megacity of Shenzhen, according to the state-run Securities Times, transactions of second-hand homes in Shenzhen surged 32% in November. However, compared to the same month last year, the number of transactions is still down over 64%. And now let's look at two property developers that are feeling a lot of pain this week. Chinese financial media outlet Yicai reports that the Chinese property developer Fantasia Limited has been forced to sell two major properties, one in Beijing, the other in the Zhejiang port city of Ningbo, in order to raise funds to meet their financial obligations. The paper described the developer's situation as a debt crisis. And the other developer that we have been following for months now is Kaisa Group. This week, offshore bondholders in Kaisa have rejected an offer to extend the maturity of its debt to avoid default next week. Now all eyes are on the developer to see whether they can meet their obligations next week or default. A development that would throw the already crisis-hit Chinese development sector into even more chaos. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.